Hello grade 12 ABM students. On this video, we will talk about the cash flow statement. We will discuss the components and structures of a cash flow statement. And at the end of this video, you will be required to prepare a cash flow statement. Never take your eyes off the cash flow because it's the lifeblood of the business. What is a cash flow? Cash flow is the inflow and outflow of money from a business. This enables it to settle debts, reinvest in its business, return money to shareholders, pay expenses, provide a buffer against future financial challenges. Negative cash flow indicates that a company's liquid assets are decreasing, while a positive cash flow indicates that a company's liquid assets are increasing. Let us now talk about the cash flow statement. A cash flow statement is a financial statement that summarizes the amount of cash and cash equivalents entering and leaving company. The cash flow statement measures how well a company manages its cash position, meaning how well the company generates cash to pay its debt obligations and fund its operating expenses. According to Deloitte Global Services Limited, provides an analysis of inflows, enter or outflows of cash from or to operating, investing, and financing activities. This statement shows cash transactions only compared to the SCI, which follows the accrual principle. The CFS provides the net change in the cash balance of a company for a period. This helps owners see if their revenues are actually translated to cash collections or if they have enough cash inflows in order to pay any maturing liabilities. What is the relationship between SFP, SCI, SCE, and CFS? Aside from the general ledger, the SFP of the preceding period can also provide the beginning cash balance that is listed in the CFS. The operating activities, on the other hand, can be lifted from the SCI, but the data should be modified based on non-cash transactions carried in the SFP. Financing activities and investing activities are obtained from the SFP and SCE. In turn, the end result of the CFS, which is the ending balance of cash, is reflected in the SFP of the current reporting period. So the cash on CFS will be the cash on the SFP, which is a current asset. What makes up the CFS? Business activities affect cash balance are categorized into three components: the operating activities, financing activities, and investing activities. These make up the statement of cash flows. Operating activities are intended to generate income for the business. Thus, they affect net income. Covered under this category are ordinary and necessary expenses related to sales or to rendering of services to earn revenue. Based on the operating activities, it increases in cash when we have sale of goods or services, sale of trading securities, interest income, and dividend income. There will be a decrease in cash when there is a purchase of inventory, operating expenses, taxes, interest expense, and purchase of trading securities. Financing activities are the transactions between the business and its owners and creditors. These activities affect non-operating current liabilities, non-current liabilities, and owner's equity. To determine financing activities, refer to sources of funds for the business, either from loans or investment placed in the business by the proprietor. The intentions of financing activities are to raise working capital to be used for business operations, to acquire plant, property, and equipment for the business. For financing use, indicate the counterpart of financing sources. There is an increase in cash when there is a cash received from the owner's investment or borrowings, while for the decrease in cash, owner's drawings or the payment of borrowings. Let's now talk about the investing. Investing activities are transactions that will affect non-operating current assets and non-current assets. The investing activities arise from business transactions involving acquisition and disposal of assets other than inventory, which are needed in the operation of the business. The primary purpose of investing activities is to acquire an asset in order to assist and facilitate business operations. For investing activities, the purpose is to earn additional income for the business, as in the placement of excess funds in securities such as stocks or commercial papers. A major investing activity is the purchase of a fixed asset, which will be used in operation of the business such as building, equipment, and furniture. Meanwhile, sources of cash for investing activities include proceeds of disposal of non-trading securities and plant assets. There is an increase in cash when there is a sale of plant assets, sale of non-trading securities, sale of business segment, and collection of loans. There will be a decrease in cash when there will be purchase of plant assets, purchase of non-trading securities, and making loans to other entities. Let us now proceed in preparing cash flow statement. The cash flow from operating activities can be presented using either the direct or the indirect method. Indirect method. Using this method, the entity's net cash provided by or used in operating activities is obtained by adding the individual operating cash inflows and then subtracting the individual operating cash flows. Let us now have the three important parts of a cash flow statement using the direct method. The first one is the net change in cash or net cash flow. It is the total change brought by operating activities, investing activities, and financing activities. This will be the last part of our financial statement. The balance of the cash account is the beginning cash balance, while the ending cash balance is the balance of the cash account at the end of the accounting period computed using the beginning balance plus the net change in cash for the current period. This will be our format for our presentation of the financial statement. First part will be the cash flow from operating activities. You have to determine if the activity will increase the cash or will decrease the cash. If it's an increase, you have to use addition. If it's a decrease, you have to deduct it to our cash. The next part will be the cash flow from investing activities. If it's an additional investment, it will be an increase. If it's an withdrawal, it will be a decrease. Then, the third part will be for financing activities. You have to determine if it will increase the cash. So you have to add, and if it's decreasing the cash, you have to deduct. After determining the net cash inflow from the operating activities, net cash flow provided by or used in investing activities, and net cash provided used in financing activities, you have to get the net cash inflow. Let us analyze this example. Weddings R Us statement of cash flows for the month ended May 31, 2015. The first part will be the cash flow from operating activities. Please take note, if it will increase the cash, it will be positive. But if it will decrease the cash, it will be negative. The first one is the cash received from clients. This is a positive value, 60,400. The next part will be payments. Payments to suppliers, payment to employees, payment for office rent, and payment for insurance and utilities. They will all decrease the cash. Therefore, they are all negative. For us to determine the net cash provided by or used in operating activities, you have to deduct the payments to the cash received from clients. So the net cash provided by or used in operating activities is 11,200 pesos. The second part will be the cash flow from investing activities. We have here two transactions: payment to acquire service vehicle and payment to acquire office equipment. Both of them are payments, so they are all negative. For you to determine the net cash flow provided by and used in investing activities, you have to get the total activities or the total payments from the investing activities, and that is 435,000 pesos. Next, for the cash flow from financing activities. The cash received as investment by owner is considered to be positive because it will increase the cash. The cash received from borrowings will also increase the cash. And then the payments for withdrawals by owner is negative because it will decrease the cash. So the net cash provided or used in financing activities is determined by adding the cash received as investments by owner to the cash received from borrowings and then deduct the payment. So we have here positive 446,000 pesos. The net decrease in cash is the totality between the net cash provided used in operating activities, in investing activities, and in financing activities. So we have here 22,200. Since the cash balance at the beginning of the period is not given, so it is 0. And adding the net increase or decrease in cash and the beginning cash balance, you will determine the ending cash balance. So we have here 22,200. The second method is the indirect method. The indirect method derives the net cash provided by or used in operating activities by adjusting profit for income and expenses items not resulting from cash transactions. How are we going to determine the adjustment? The adjustment begins with profit, followed by the addition of expenses and charges that do not entail cash payments. Then, increases in current assets and decreases in current liabilities involved in the determination of profit but which did not actually increase or decreases cash are subtracted from profit. Then, decreases in current assets and increases in current liabilities are added to profit to obtain net cash provided by operating activities. For better understanding, please follow this format. We have here the profit and then the adjustments. For example, depreciation, so it's a non-cash expenses. Next, increase in current assets account, decrease in current liability, decrease in current asset, and then increase in current liability accounts. And the totality will be the cash flow from operating activities. Let us analyze this example. Sunshine's Guitar Shop, statement of cash flow for the month ended May 31, 2015. Let us start with the cash flow from operating activities. We have here the net income, and then followed by the adjustments. So adjustments to reconcile net income to net cash provided by operating activities. First one, the depreciation on fixed asset. We have here 2,000. And then increase or decrease in current asset. Accounts receivable, it's negative 300 pesos. The inventory will be negative 39,800. And then the prepaid expenses will be negative 1,000. For the next part, the increase or decrease in current liabilities. So if you have your account payable, it will be positive. And then the accrued expenses and unearned revenue is also positive. As you can see, this is indirect. So the assets will be negative while the liabilities will be positive. Then determine the net cash provided by or used in operating activities. So we have here 24,300. Followed by the net cash flow provided by or used in investing activities. So you will follow here the same pattern. Purchase of property and equipment is negative because it's a purchase. It will decrease the cash. The last part will be the cash flow from financing activities. Proceeds from line of credit, there is no value. Payments on line of credit, 10,000 pesos. Proceeds from long-term debt, 99,500. And payments on long-term debt. The net cash provided by or used in financing activities will be 109,500. For the net increase or decrease in cash, you have to get the total between the net cash provided by or used in operating activities, the net cash flow provided by or used in investing activities, and then the net cash provided by or used in financing activities. Since there is no beginning cash balance, this one is 0. Net increase plus the cash balance at the beginning of the period will be your cash balance at the end of the period. So we have here 32,800 pesos. Thank you for watching this video. Good luck and God bless you all.